Airbnb's stock performance has not attracted many investors as we're coming off the backs of a 60% decline in that stock since those February 2021 highs, up at around $212 per share. But so far with the 2023 market rally, the stock is up about 50%, which now puts them at a market cap of about 85 billion US dollars and a PE in the high 40s. So now that they've reported their Q4 earnings results, it's time to now take a look at Airbnb's business to see whether or not there are any value investing opportunities, with the stock being down to all-time lows and now putting in what appears to be a bottom. So make sure to stick around to the end of the video as we'll answer all your questions and more. How's it going? Welcome to Everything Investing. I hope you're having a great day. As always, we will start with the fundamentals of this business. We'll use that in conjunction with our trajectory of this business to make an evaluation on this business to see if there's any buying points that will interest us value investors. And if you do enjoy this type of content, make sure to smash that like button and also subscribe, as it really helps out the channel. Definitely make sure to comment your thoughts in the comment section below. And with all that out of the way, let's jump into the video. All right, we're looking at Airbnb's Q4 earnings. What have they reported on this year? Well, let's start off by looking at this from a high level perspective here. Revenues increased about 24% on a year-over-year basis for this quarter. If you're looking at this from a yearly perspective, a 40% increase on those revenues. Massive numbers there. Now, profits also did increase. They actually expanded their margins by double digits. Their free cash flow has expanded as well, up 21% year over year, 50% on a yearly basis. This is a result of their gross bookings increasing, 35% on that yearly basis, up to $63 billion. Nights and experiences booked up 31% on a yearly basis. So some very strong numbers there, not only just in this quarter, but also on a year over year perspective. Obviously, we're coming out of a period where we had lockdowns, things like that. So now that people are out and about, they can use services like Airbnb. Now, if we look at this chart here from Main Street Financial Data, and the first link in the description, an amazing investment resource for us value investors to check out. We can look at this chart and how we've seen their gross bookings transition over the last few years. As you can see, we had that negative downturn here from early 2019 into mid 2020. Then we actually saw that rebound from those levels, and we haven't really looked back since. Although I will say over the last few quarters, we have seen a bit of a slowdown, but still, if we look at this from a year over year perspective, still doing better than what we had last year here. And so that's going to translate well over to their nights and experiences booked. Same kind of translation you'll see there, shifting from a negative period up into a positive staircase higher. Again, we have seen that slow down a little bit on a quarter over quarter basis, but if we're looking at this long term and over the last few years, we're seeing that expansion, and that's exactly what you would want to see as we recover up to those levels and exceed these levels that they had previously before the lockdowns and such. Okay, translates well over to revenues. Okay, if we look at this from a year over year perspective on those Q4 numbers, in 2019 we had a 32% year over year change. Obviously, they're excluding 2020 because we know what happened there. Massive slowdown with all the lockdowns and things. Their business was absolutely hit. But then once we had some recovery here in 2021, a 78% increase on those revenues, and now this year again another 24% increase, up to $1.9 billion. If we look at our net income here, you can see back in 2019 they weren't even able to be profitable, but after that 78% increase to revenues, they actually were able to achieve profitability there in 2021. Now that's actually accelerated further in this Q4 of 2022, up to $319 million. And that's honestly exactly what you want to see from a business that was previously struggling with profitability. Can they expand on their profitability once they do achieve profits? And so far that has been what they've been able to do here. Let's quickly go through the consolidated statement of income here and look at this from a year-ended perspective. Massive increase on those revenues. Cost of revenues did increase, so did some of their other expenses, and so they went from $5.5 billion in expenses up $1 billion to 6.5, but that allowed them to actually profit a lot more on the back end. They're keeping about $1.8 billion in value creation, $9.6 billion of cash on their balance sheet. Long-term debt from the balance sheet here, only about 1.9, let's just call it $2 billion of debt on that balance sheet. So that is a very strong liquidity position there for Airbnb. And if we look at this from that free cash flow perspective, again, $3.4 billion in cash that they can reward shareholders with. Well, what exactly do they reward shareholders with? You look at this 2022 chart here. Yeah, they're not really using all their cash, and they don't need to. Their main focus, however, is to repurchase some of that common stock back, make those shares a little bit more valuable. I really like this down here at these lows, because especially if the business can start to rebound from these levels, they're going to profit as well, making those shares a lot more valuable when they're buying them back at lows. Now that leads us to our operating income. Again, look at the transition over the last few years. 2020, a very poor year for them, but they've been able to reclaim those profits up to $1.8 billion now versus that south of $3 billion figure back in 2020. And if we look at this from an outlook perspective here, they're expecting revenue growth, at least on a year-over-year basis, of about 16 to 21%, which will be interesting to see, especially if they can expand on that into the next few quarters as well, because that'll definitely mean more profits for Airbnb and most likely a higher stock price. But altogether, if we do expect that this business can at least achieve $1.8 billion again next year for 2023 in operating income, if we require a 10% return, of course, they do not pay a dividend yet, and they're only able to grow at 6% for the next decade on a 50 PE like they're kind of trading at right now. They're kind of trading more so in towards 47. Nevertheless, the stock would be trading at about $150 per share, in a very average case scenario. If we look at where the stock is currently trading at $130 per share, a little bit of upside there, but that's a very, very modest 6% growth when they're kind of alluding to 16% growth for the next year or so. So if we add that into our calculator here, at least for the next 5 years, they can grow at that rate. Then for the 5 years after that, let's say it stabilizes out at more of like an 8% growth rate on about a 50 PE here, the stock would actually balloon up to $273 per share. Again, massive increase there, assuming they can achieve these growth numbers. But in the very worst case scenario here, where the stock can't actually grow for the next 5 years, let's say we have further economic hardship, there's a lot more competition, maybe they have to increase prices and that negatively affects consumers, something like that, and they can only grow at 5% for the 5 years after that on just a 35 PE, the stock could only be trading at about $80 per share in the very worst case scenario. Obviously, if this does change and let's say they can achieve an extra $1 billion by the end of the next year, they're able to achieve almost $3 billion. You can see how that impacts the growth calculations here, where in this scenario here with no growth basically over the next 5 years and $3 billion in earnings, they'd actually be fairly valued right there. So it really depends on the amount of profits that they can produce over the next few years. But overall, if we're looking at this from a pros and cons perspective here, we have approximately 10% yield here for Airbnb stock. That includes some of their buybacks and also the growth that they're expecting to achieve. So at least from a business perspective, they should be able to achieve at least 10% on a yearly basis. So that is decent from an investment perspective. They do also have some competitive margins. And I'll say the other pro here that they do have is that they have growing fundamentals, especially with that profitability. Now that they have shifted into profitability, it's a lot more digestible for investors to get on board with a business that does have profits and is growing at the rates that they are currently growing at. Now, in terms of cons, they do have some competition. They are competing for that same market share as hotels, Marriott, Hilton, those cruise lines as well. They don't really have a huge barrier to entry into this space either, but they do have that first movers advantage. The business is also very cyclical. Obviously, like we saw in 2020, we saw that huge drawdown in the fundamentals, so it's not recession proof. And in hard times, the business will struggle. And the third thing that I don't really like about the business is that it is very reliant on their growth. As you saw from our calculator there, if the business can't grow, the stock would be slashed in half as it was from 2021 until now. But the opposite is true. If the business can actually sustain their margins, improve on them, the business and the stock price will definitely increase from these levels. Altogether, I'm going to give Airbnb stock about a 6 in terms of an investment rating at this current point in time. Down there at sub $100 per share, definitely more into 7 or 7.5 rating, but up here at $131 per share, I'm going to stick with that 6. And that's the analysis for today's video. If you did enjoy, please smash that like button, subscribe, as it really helps out the channel. Make sure to leave your thoughts in the comment section below. And with all that, I'll catch you on the next one.